So this is a little panel before the lunch break. The idea is to entertain you and to educate you about something that I'm excited about, and I totally don't know if these gentlemen are so excited about it, so we are going to find out. And it's basically the cooperation opportunity between venture capital, for example, this little gentleman there, Rene, and impact investors, for example, Daan. By the way, I forgot to tell you, this is not Ime Bosma, this is Daan Lameris, the colleague of Ime. And this is Mike Mompi of ClearlySo. And this is Andreas of Solarkiosk. So who wants to give me a definition of impact investing and how much you believe in? It's actually a question for all four of you, that there is a cooperation opportunity. And if you are of a different opinion, please let us know too. Who's starting? Rene.
Oh, thank you. The one that does not impact investing in the sense that it is defined as having environmental or social impact, and then do that also with an eye on financials. That's I think the broad definition of impact investing. I think we're all trying to impact our industries that we invest into. For instance, for us, that means that we invest into the energy sector, and we help that transformation, which is another word of impacting. Transforming, impacting is close by. But where it really differentiates from is the guys that invest in things that they want to disrupt, that has something aggressive in there. They want to just take things apart, like dinosaurs eating their food. I think that's where the distinction becomes between an impact investor, a venture capitalist, that is a granularity there in the way we are trying to influence the future and change the future in a way that it's a better going forward.
Daan, what's your take on it?
Yeah, well, I think it's the difference maybe between a venture capital and impact investor is that the main goal for a venture capitalist is to maximize its profits, so it's purely financial return, and impact is a nice to have. And with impact investors, it's earlier the other way around. It's more focused on impact, and financial return is a nice to have. And most of the time, it can really go hand in hand pretty well. So, but I think there is a slight.
Rene, how easy is it for you to make a good financial return these days in clean tech?
Well, then you assume that we are still in clean tech. Actually, I use this stage also to introduce something else. I want to introduce the term NTech, energy technology. You have fintech, which we all understand is ICT going into the financial sector. We have agtech, ICT technology going in agriculture. And we have ICT technology going into the energy sector. That's called NTech. You can have the word, and you can market it from here on. It's fine. But I think that is the category that we're in. Clean tech in itself means that there's also dirty tech. I've never heard anybody investing in dirty tech. So that bucket of activities that are falling under clean tech is disappearing. I think there's money to be made. Later on in the panel, you're going to ask the question about what is your investment strategy. The first question we ask when we see a proposal coming in is, what is the impact on energy or the energy sector? It's the first question we ask. It's not how much money we can make with it, that's the first one. And when we feel that is something that we can embrace, then we're going to look at the business model and how money can be made and what the returns can be and whether it is going to be an influence for us raising our next fund, because then the LPs will ask, where did you make your money? What are your winners? How much money will you make? That is what we have to live with. If you don't have that metrics there, then your next fund will be unfundable.
Mike, I want to pass it on to you.
Yeah.
You are London-based.
Yes.
We only recently met. And you are working a lot with impact investors, and you are trying to put them in touch with nice projects, nice startups. How do you do it, and what do you think about this cooperation opportunity I was just describing?
Okay. Yeah, so first I'll say a little bit about what we do, and then I'll kind of go on to kind of address some of the points and answer the question around how to collaborate. But so the firm is called ClearlySo. We're a corporate finance firm focused on impact. And when we say impact, we mean things that create a positive impact on society or the planet. So when it's society, it's very much in health and education. And when it's the planet, it's clean tech. We can call it ag tech. as well. So we run the UK's largest grouping of individuals and families that are placing private capital into private high-impact businesses, and we do corporate finance work for different transactions, so raising from as little as £50,000 up to about 50 million. So helping also to structure impact funds. That leads on nicely to an interesting point. Is the question is, are you a VC or an impact investor? I mean, in the UK, we have about 8 impact VCs, right? So these are venture capitalists that consider themselves impact investors.
Can you call them? Can you tell us who they are?
Yeah, I can talk about some. So there's Impact Ventures UK that was set up between LGTVP and Berenberg Bank. There are a few others. So iPropeller is based out in kind of Belgium, but it's SI2 fund. We have also Social Venture Fund, Bridges Ventures. So there are quite a few impact investors. And the thing is that, I guess in mainstream finance or mainstream venture, the return criteria are quite objective. So you have a financial return, which can be translated between country to country through an exchange rate that's widely accepted. But when you have an impact return, different people have a different definition, where it's slightly more subjective. So the carbon footprints in London compared to in Beijing compared to in sub-Saharan Africa can be valued quite different by different people. Same as the life of a kid in Palestine or in Israel or in California or New York or Nigeria. So there are challenges. I think there's some similarities, but some overlaps as well. And in terms of how I think we can collaborate, given that we invest in lots of very early stage ventures, early stage businesses, are investors being informed and understanding what the kind of next round kind of venture investors are looking for in the deals that they want to see in their pipeline is critical. So it helps inform our selection criteria.
You come across about many startups that are actually a clean tech startup or a technology startup. I like to call them smart green startup that are talking to both at the same time, impact investors and VCs. Is this where they feel there is common ground? Is this already a practice that is happening here?
I would say, from my experience, yes. Can I just quickly get a show of hands? Who here is an entrepreneur? Can I raise a hand? Okay. We've got lots of entrepreneurs. Keep your hand up if you're an entrepreneur who's ever tries to raise capital from individuals as well as institutions at the same time. Okay. Yeah, so majority. So in fact, what we're seeing is that lots of people are raising capital from self-defined impact investors, but they're speaking with the Baldertons, the Wellingtons. They're speaking with the kind of mainstream VCs. I mean, we had what we would call a kind of impact venture recently, looking to raise capital from people who have kind of private family foundations who wanted to create an impact with that, and they ended up, closing the deal with Union Square Ventures, right? So,
wow.
Even though we felt it was incredibly high impact, these guys were changing the world and changing how people kind of consume food and engage with farmers and in a more sustainable way. The mainstream investors are seeing huge opportunities. I mean, we have an aging population. We have constrained and limited resources. When it comes to food, when it comes to pollution. I mean, there's so many problems, and there are huge opportunities in solving them. That's what we call impact investment.
Andreas, I remember that in your next financing round, you told me that you would like to have both types of investors. If they are the same in one company, even better. But you would like to bring together VCs and impact investors. And how is it in your experience to bring these people to your table?
Yeah. Okay. First, I have to size the word impact a little bit,
yes,
because it's a very watered and diluted, like sustainable. Everything's sustainable these days, and a lot of the things that you consider as impact, I wouldn't, because for me it is triple bottom line that I'm interested in. So I'm interested in social impact, environmental impact, and economical impact. And anything that only matches 2 of the 3 is, for me, as an impact investor, not really relevant, because I want social change, economic change, and environmental change, okay? So that rules out a lot of great clean tech investments that have an environmental impact, but not necessarily a social impact. That's the first thing. The second thing is, I believe that very narrowed expression of impact is the best way to make money these days, because this is an environment and a market where there's opportunities that you will not find in any other segment of the world. And I can tell you that because I've done, I don't know how many M&As in my life. And I've done the internet, I've done the clean tech, I've done a lot of all this, I've done a lot of German technology, so I know what it's about. And I changed the sites, I switched the sites, not only because I want to be a good guy, but also because I want to make even more money. Let's be very clear on that. So I'm very much capital and finance driven. So to answer your question, I believe for the real impact investments or the real impact ventures like Solarkiosk, the perfect match is strategic investors. So these are guys who want to use you as a vehicle to also drive their own product or service. And for Solarkiosk, perfect example is that, yes, you can buy a very cold Coke at the Solarkiosk, and that, believe it or not, makes who a strategic investor. And the second one...
Would you accept them as your investor, Coca-Cola?
Absolutely.
Okay.
They have a great impact department. They do a lot of good stuff. Okay. To my surprise, because I had all the...
But they are not as hardcore about impact as you
are.
They're
very,
when it comes
very
to the triple bottom line. They are
absolutely very hardcore.
Okay.
Yeah, very dedicated. They all need to change, or they're going to be washed down. Because nobody wants to drink sugar water anymore. You have to bring more to the table these days.
That's why they bought innocent smoothies as well.
Absolutely. So the second one is constitutional finance investors. We like them because the only currency they know is money, and that's a great way to measure success or failure. And I like that a lot because I want to be successful financially. And the third one are the impact investors, and those are the guys like myself. I have a couple of other investments which I don't talk about today. But also the founding members of Solarkiosk, who are really driven by the need of social change, economic change, and environmental change, just because we are so sick about what's going on in the world today, and we just need to change it. There's no choice.
How do you respond, Mike?
Yeah.
What can you add on?
All very great points, and I think, as I said, impact is subjective. Now, I would disagree that the most effective definition is a narrow one. You know, if we look at risk and return, right, this kind of two-dimensional spectrum, or looking at the capital asset pricing model, so for those who are a bit more familiar with finance, it's something that people started looking at in the late 60s, so measuring, you know, the risk-adjusted return to financial investments, which is effective, and it's great, and it's enabled people to deploy capital effectively, and effective being defined as how much of a return can you get that's risk-adjusted. And I guess our view and our perspective is, if people consider a third dimension, which is impact, in all investment decisions, then that has the potential to not just kind of support great businesses that are going to kind of improve society, the environment, and kind of the economy, but to genuinely change the world. And if it is just supporting people at the bottom of the pyramid through an educational intervention and providing them access to education that then makes their lives much better down the line, then we think that's amazing. Or if it is kind of clean tech innovation that's a software as a service platform for huge asset managers, so people who are managing the Canary Wharf buildings and making those buildings more efficient, maybe it's not supporting the bottom of the pyramid, but that is completely fundamentally changing, the carbon footprint, and ultimately, the future and the trajectory of how things go. So we argue at our firm that impact should be quite broad, and it's rather than taking the amazing examples like Solarkiosk. That's an amazing example, right? It hits all things. Not everything can do that. Not everything can be that way. But if we can expand the definition and include every single investment as a sort of consideration of impact using a third dimension perspective, then we see that as a huge success. And in clean tech does a lot of that.
Dan, I want to ask you impact measurement.
Yep.
Very important topic in this whole thing. You showed a couple of impact measures. Some people put a different emphasis on impact measures due to personal taste or even investment strategy. How do you do it at the DOEN Foundation? What are your key impact measures that you are looking at? And how well is your portfolio able to provide all these measures on an automated basis, for example?
Well, it's a difficult topic. Yeah. You can measure as much as you want. So we have on two levels, more or less. We have a pretty straightforward way to look at it. So how many people get access to clean energy, for example. The other one is how much energy is saved or how much CO2 is saved. The other way we look at it is then we look at the whole program or a number of investments or grant-making programs, and we look back and say, well, what has been our role? Because if you only look at access or at efficiency, then it makes more sense to invest at a later stage, for example, and only provide growth capital, because then in the beginning, when you make something possible, there's not much impact. But for us, we think we can play a role in the beginning of a venture. So that's what the other level looks at. So we have independent consultants, and they look back and say, well, for example, what happened if DOEN didn't finance this company? So what is your added value? So that's the way we tend to look at it.
Rene, do you do impact measurement in your portfolio? Do you support it? Do you require it?
Well, there's two kinds of impact. One is, at least the way we define that, is impact is also scale. Because if you stay a small company with 3 customers, you do something very good, but the impact is small. So scaling companies up and having a broader delivery helps. You know, your example of going from 100 to 200 to 600, whatever, kiosk is obviously a great measurement for that. That is impact. The other side of the impact is that we have, I think we were one of the first venture capitalists that implemented an ESG toolkit and a monitoring system, to the extent even that nowadays, when we negotiate a term sheet, there's already the paragraphs in there that we demand from management to report on ESG-related issues, even though they are still too small to really make an impact on that, but we start to work with the portfolio companies to make that an integral part of their decision-making as well. And to our LPs, which are our customers basically for the money that we get, we report back on how these companies are performing on these ESG elements. And so that's how we measure and control and check ourselves. By the way, interesting enough, the best performing companies in our portfolio are also the ones that are most serious about ESG. It's a very interesting phenomenon. We don't have a huge portfolio that we can make this statistically completely sound, but we have the impression there is a good correlation between attention for ESG-related issues. Maybe the governance in that is the most important one for small companies, but they are the ones that perform overall, also financially, the best.
Andreas, do you think, talking about scale, in order to reach scale, you need a lot of ambition? Do you actually think that you are ambitious enough and fellow impact startup entrepreneurs are ambitious enough to really have a big impact?
Well, I'm personally very tired because I've been in a plane for the past 5 years. So I'm very happy to give it to the next guys who want to take on the mission. But until that happens, I'll continue to do so. Of course, I have the ambition. That's why I changed my entire life from a very comfortable, suited lawyer to an entrepreneur, going to the base of the pyramid and sleeping on the ground next to my customers to learn about their customer behavior. I totally agree about scale. Scale is everything. If you have an impact venture that has not the possibility to scale, you are failing the mission, because we need to scale. That's what other business models, pay-as-you-go solutions bring to the table. They can easily scale. And as I would like to emphasize also, I want to make a lot of money. And funny enough, those who have the greatest impact are also the ones that are financially the most sustainable. Solarkiosk being one of them. If you look at our numbers, you will be amazed. The growth is last year 200%, not only in turnover, but also in gross profit. That's quite amazing. And that is needed to be able to scale. And that's what distinguishes us from the development aid, which we know from the conventional way, which was just throwing money at those apparently very poor people, but there was no sustainability in that. It just dried out. Yep. Whereas if you come as an entrepreneur with a business concept and a business model which brings a lot of work to the people, which brings a lot of profit to the people, but people at the base of the pyramid, then you will also gain a lot of profit and can use that to scale your operations. And that's what I would say a good handful or maybe 2 handful of companies worldwide are doing now at the base of the pyramid. And to my understanding, they're all making significant profits.
Mike, do you have many companies that you come across that are equally ambitious and ready to scale and qualified to scale, because I think you need the right people, you need the right business model, whatever it is. Yeah, you need a supply chain that is hopefully green and scalable in order to scale. Is this something that is creating headaches for you or even challenges?
I think that's a very good question, and I do agree. I think broadly, I think with your points around scale and impact, and it is critical to have impact at scale. Now, again, that there's a challenge, I think, for some organizations that when they scale, they dilute.
True.
They dilute their impact, they dilute their mission. I mean, if you take, for example, a very simple example, the insurance industry, right? You started with a village of 100 homes, and because sometimes homes would burn down, they said, all right, let's everyone put $1 in a hat. If someone's home burns down, you get the hat. As the village grew, they needed someone to kind of manage the hat, to manage the money. They're like, oh my gosh, inflation, let's start managing that. And it's changed from something that was creating value for a local community and protecting people to something that's now extracting value and not at all looking to kind of protect people. So the challenge then for us is identifying models that at an early stage we can see that there's a lock between the scale financially and the impact. And the deals that are the biggest, the deals that are getting kind of the most interesting investors, later stages, larger rounds, and performing the best are the ones that are incredibly scalable. But as they scale, as commercials increase, so does impact. So yeah, I agree. It is a challenge. So.
Daan, in your experience?
Well, I agree it as well. If we look at two examples, for example, with M-Copa and with Bcash. Bcash is a mobile money platform, and they have about 2 to 3 million transactions a day. So from an impact point of view, it's a very good investment, but also financially seen, it's a good investment. But you can get into troubles like microfinance. So you say, I want to make as much money as possible. Well, if you want to make as much money as possible, then you can overcharge your customers, for example. And then the impact investor thinks, well, this is not why we meant to invest in this company. And maybe if you want to make as much money as possible, it's a bit of a short-sighted kind of vision, but you want to do that. So that's, if you come back to the discussion, what kind of shareholders do you want? You must have some alignment in shareholders.
Absolutely.
But you also can complement each other. I think that, if you look at the similarities, is that we're all looking, impact investors and traditional VCs all look for scale, so that needs ambition. But in both sectors, ambition is sometimes also a little bit naivete. People are very ambitious but also naive. That's why you become an entrepreneur, which is the definition of an entrepreneur, somebody who's naive enough to start something. But there's a lot of here. Thanks God. But so that's where we find each other. We're looking for the same things. But what the VC brings a little bit more than the traditional impact, I would say, traditional impact investor, is that building companies. That is basically, I think myself, not as an investor, I think of myself and my team as company builders. Now, whether you do that in an impactful venture or a venture that is totally focused on financial return, it's actually the same thing.
True.
In the end, what it all boils down to is, where do you want to be measured at as an investor? As an impact investor, you're measured on the impact that you make, whether that's the triple P completely or it's a subset of that, doesn't matter. I know that for sure that I will be measured on the financial return that I bring. That's the way it is. We are in fundraising, and I know how fundraising works, and the due diligence is all about what is your damn track record. And if that is the definition of what you have to adhere to, then you're going to focus on that in the end. So where we can start with great similarities between a traditional social or impact investor and a venture capitalist, in the end it comes, where do you see your results and your credibility coming from? And that's where it becomes tricky. And composing those kind of shareholder bases for a startup then is not easy. You have to really talk this through and let the investors also talk it through themselves, whether they feel comfortable.
I was just going to say that's very quickly an interesting point on values alignment between investors and founders. And as I mean, we're seeing a lot of so next generation wealth, and as new investors are entering this space, they're more aware of the problems that we're facing, the challenges with environment, sustainability, and all of that. And as values shift slightly, it might become more necessary to start tracking, reporting on whatever the kind of impact criteria are. But I just wanted to flag, and if it comes to valuation discussion, for example, if someone's aware that you're changing lives at the bottom of the pyramid and they want that, well, then they're placing a higher value on that than an investor who's purely coming in to kind of look at what sort of profits can be made on a solar deal. So I think for the entrepreneurs, really important to kind of identify value-aligned investors.
One little thing, geography, I think is quite important in this whole discussion too. I know you guys really like emerging markets. There are many people...
Developing markets.
Developing markets, yeah. You guys have so far invested mainly in Europe. You do one deal in Canada.
Yeah, our mandate is to invest in Europe. So we can invest in a company that is operating in Africa, for instance, or even the US.
Solarkiosk is impossible for you?
Well, if it depends on where the company is located. The activities can be in Africa, wherever. Yeah. But if the company is located in Europe, doing business in Africa, that is fine with us.
So they qualify, right?
On that element, they would qualify.
In Berlin. Berlin is Europe.
Last time I checked.
Last time I checked, yeah.
London, Europe? Yeah.
For you, Daan, geography, it's basically
well, that's not an issue. So we have the mandate to invest directly, indirectly, and also to do it outside of Europe, for example.
Okay, we do a final closing thing. Each one of you, one piece of advice, like 1 or 2 sentences, for the startup entrepreneur who is interested in getting more capital from impact investors. The VC story we already know quite well here at Ecosummit.
Let's leave the impact aside for a while, because that's, for me, very narrow, a very narrow definition. But what I liked a lot about your statement was the naivety. Yeah. So I see a lot of young guys always. Yeah. For me, the ideal startup is a very young guy and a seasoned guy, because the seasoned guy brings the experience and will steer you through all these processes. And one thing, rest assured, now they smile and they're very nice guys. But when it comes to doing the deal, oh my God! And that's not a critique, but it's just a statement. They are as tough as all the constitutional investors when it comes to doing the deal. I mean, rest assured. So you want a seasoned guy on the side who steers you through it when it comes to liquidation preference and all these nice goodies. So that's my advice here.
Mike, final piece of advice?
I think I actually gave it. It was identify value-aligned investors, people who believe in what you're doing, who believe in you. Surround yourself with people who complement your skill set. And just kind of in line with what everyone else is saying and what Steve Jobs said is be hungry, be foolish. And, most entrepreneurs are taking completely unreasonable risks, trying to create, markets that don't exist and products that don't exist. So I guess without the entrepreneurs doing that, then, we wouldn't progress. So thank you.
Daan?
Well, look at the alignment of shareholders, but also look at their exit strategy. Sometimes you have closed funds, and if you're really early stage, some shareholders want to have an exit in 5 to 7 years. So you have to ask yourself that question as well.
And how can startups raise more money from you, Rene?
Well, for starters, they have to fit in our investment priority. That's what it all boils down to. If it's something that's out of our priority that we have defined very narrowly, just like you have done as well, we invest in what we now call smart energy solutions, but that's what it is, software, services combined with hardware that impact the energy sector. If that is there, then with an ambitious proposal and with flexibility on working with several investors at the same time, that is the kind of stuff that we like to see. And the impact that we make is that this whole energy industry has to change from the fossil fuel that we're in right now to a clean solution. But that requires transition and money and ambition.
All right, I hope this panel created a little bit of impact for you. Now it's time for lunch. We need to recharge, eat, drink, and have some fun and do networking. I see you back here in 1.5 hours. All right. Thanks.